Hi folks, today I'm joined by Mark Hepsworth, President of Pricing and Reference Data at Interactive Data. My name's Will Rhode, I'm Director of Fixed Income Research at TABB Group. Mark, thanks a lot for coming down today to talk to us a little bit about real-time corporate bond pricing. You put out a press release earlier in the year, and tell us a little bit what's going on. What have you got in mind?
Well, Will, thanks very much for having us. Yeah, we're very excited about this. As you probably know, we're a very large provider of end-of-day fixed income pricing. We're currently pricing about 3 million securities every day. But what we feel is that there's an opportunity for us to provide real-time pricing during the day as well, and to help clients with pre-trade transparency.
What are some of the challenges when it comes to trying to establish a real-time corporate bond price, given the fact that as you say, you've had so much experience on the post-trade side of the business? What are the challenges in terms of developing it from a pre-trade perspective?
Sure, I think there's certainly some operational challenges. One of the very important ingredients of our end-of-day pricing is the fact that we have over 200 evaluators around the world. So we have that human input that we think helps a lot. What we'll be doing as we move to real-time pricing is continuing to use the human input from the evaluators, but moving to more of what we're calling a continuous pricing mode. So as opposed to just being geared up to send out pricing at the end of the day, we're looking to roll out new technology and also work with the evaluators to provide continuous pricing during the day and provide them with tools that allow them to do that. At the same time, we're also doing a lot of work on a range of new models that we think will really help us, particularly with some of the more liquid and liquid parts of the market, will really help us bring real-time pricing to the marketplace.
Interesting. And so what's the need? You were telling me a little bit earlier about the communication channels between the back office and the front office in terms of reconciliations between portfolio evaluations, and also we were talking a little bit about the market. But tell me, what do you think is the need for a real-time corporate bond price?
Sure. We think the marketplace is looking for as much, in the front office is looking for as much information as possible about the value of a bond. I mean, it's a very large asset class. It's a pretty illiquid asset class. We've obviously got some bonds in there that trade rarely, and we think even though traders often know the bonds that they deal with pretty well, they're still looking for as much information as possible. And what we hope to be able to do is to provide an additional input, an independent input, a reference point around what's the value of that bond before people decide to trade. What we hope is that will help with liquidity. We know there's an issue with liquidity out there in the marketplace at the moment. Certainly, one of the things we've heard is that as the buy side is looking to sort of transact, whether to buy or to sell a bond, they would like as much information as possible as to what is a fair price, a fair value for that. I think what we can do with this pricing is start to help fuel that sort of discussion and help people have some sort of reference point. Before they decide on a transaction.
I'm always thinking about what is the relationship in terms of transparency and liquidity for corporate bond pricing, because if I look at a lot of the traditional relationships that exist bilaterally between dealers and their clients, transparency isn't necessarily seen as a good thing, especially if risk capital is going to be employed to help execute the transaction. But then we already know, as you said, that liquidity is already challenged, right? So how much capital is going to be provisioned? So people are looking at other ECNs or alternative places to do business, which seem to require transparency in order to attract liquidity. What do you think? What's going on here, and how do you think this is going to play out?
Sure. Well, I don't think we're likely to see a return to sort of risk capital really saving the day. And
really?
I think we're seeing a lot of initiatives at the moment, or people try to come up with ideas to find a different way of doing that. I do think the markets, the electronic markets, the ECNs have got a real role to play in that. But I think one of the issues for people is trying to have a price that they can look at that can start to engage the conversation around. And I think The other value that independent pricing can bring is helping to automate as much of the process as possible. So we don't feel that the human trader is going to disappear in the fixed income markets.
Right.
We feel that people are going to try to automate as much as possible, to try and serve up as much as possible that they can to the trader, but the trader is still going to be involved. And in terms of transparency, I mean, we already do a lot of work in terms of transparency around our end-of-day pricing. I think what we're looking to do is to recognize that there's probably still going to be a conversation in many cases between the buy side and the sell side before a transaction is done. But we would like to try and provide as much information as possible as how did we get to that price. What was the sort of market color that we were seeing? Was there underlying reference data or events that were a factor in the price that we came up with? And I think if we can provide that, it gives people as much information as possible to then make their own decision on what is the final price that they've transacted at.
I think that's really interesting because, as you know, we published a report pretty recently on real-time corporate bond prices, and it really struck me that the dealers, as the inventory holders, had the tools, had all these inputs, had all this color around how to price. They could see flow, they understood the relationships, they had obviously a lot of, maybe some would have had a primary origination business which would have fed the kind of their intelligence. But the buy side, even though they've ended up becoming a lot of the inventory holders, don't necessarily have the same toolkit. So in a way, this seems to be a possible solution to that problem.
I hope so, and we hear a lot of concern from the buy side about secondary market trading. There's often they want to get into a bond, but they're not sure they're going to be able to get out of that bond, down the track. And I think I don't think that's good for the fixed income markets. And the majority of our clients on the end of day side are the buy side. And I think if we can try and sort of facilitate more engagement, with the buy side wanting to sort of transact, I think it's got to be a good thing, for everybody.
So what's the plan? When's it coming out, and what's your plan for it?
We're working on it at the moment. We plan to release something into production in the second half of this year. Initially, we'll be focusing on corporate bonds, but ultimately, we will be expanding this to municipals and structured securities as well.
Great, that sounds like an excellent initiative, and I look forward to seeing what you come up with and getting a demo.
Yeah, you'll be the first.
Great, thanks a lot for coming in today, Mark.
Thank you very much.
Much appreciated.
Thanks for having me.
No problem. Thank you, folks.